Hey everyone, SoundHound AI is one of the hottest artificial intelligence stocks in the market today. The stock price has soared and then come back down in 2024. Of course, I've already made recommendation videos or prediction videos on where I think SoundHound AI stock will be in 2024 and in 2025. In this video, I'm going to provide my prediction for where SoundHound AI stock could be in 2026. So let's jump right into it. Let's take a look at this stock prediction for SoundHound AI stock.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, like I mentioned earlier, I don't have SoundHound AI stock rated as a buy. I've told investors all year long that I don't rank the stock rated as a buy. I think the risk versus reward is not worthwhile, and I've been saying that all year long pretty much. So on April 2nd, I updated that recommendation saying keeping it rated as a hold and market perform. Of course, if you listen to that recommendation, you would have missed out on this huge surge in valuation for SoundHound AI stock in 2024, but you will have also missed the big stock price drawdown decrease in later in the quarter. So depending on the timing of when you've been making this decision, the recommendation could have either saved you money or cost you money. Nevertheless, I've felt all year long that the risk versus reward has not been worthwhile. It's a very, very risky investment. It has a lot of potential. It has a lot of potential to be sure, but it's really risky. As you can see, the valuation fluctuating up by nearly 2 billion in enterprise value and then down by nearly 1 billion, all in the matter of a couple of months. So that's what makes it risky. That's what makes it really volatile. Now, I'm going to need this enterprise value to make my prediction for where I think the stock's going to be in 2026. So right now it's trading at an enterprise value of 1.5 billion. I also need its enterprise value to revenue ratio. As of this recording, it's trading at an EV to revenue of 32.75, and you can see how that valuation has soared. Even though it's come back down, it used to trade at an EV to revenue of 60, which was absolutely incredible. Now it's down to 32.75, but still, even at 32.75, you can see it's higher than it was been in the last year. So even at this depressed valuation from earlier, just a couple of weeks ago, it's still trading at a more expensive valuation than where it was all year last year. But still, the company has made great progress in the last year, so it deserves a better valuation than where it was last year. Because remember those cost-cutting, restructuring efforts SoundHound made? That's really paying off. The company increased revenue by 80% in the latest quarter, all while decreasing sales and marketing expense by over 30%, demonstrating organic growth for the company's services. And going forward, demand for AI is increasing, and NVIDIA has made a strategic investment in SoundHound AI, so its prospects look strong. However, the valuation is already incorporating much of those excellent prospects. Now, I also need the growth rate for SoundHound AI. According to Wall Street analysts that are following SoundHound AI stock, they think it's going to grow by 51.5% sales in 2024, and then they think it's going to grow another 48% in 2025. So for 2026, I'm going to assume a similar slowdown in growth rate. You could see how it's going to drop from 51.5 to 47.9. I'm going to assume that growth rate deceleration continues in 2026. Let me show you what I mean. So for 2026, I'm going to assume a growth rate of 45%. 45%. That's a little bit down from 47.9% in 2025. So I'm going to assume that decelerating rate of growth trend for SoundHound AI. Now, if I apply that 45% growth rate to revenue of 103 million in 2025 expected, I get a 2026 revenue estimate of 149.35 million. And if I take that 149.35 million and I apply the current EV to revenue multiple of 32.75, I get a valuation of 4.9 billion, an enterprise value of 4.9 billion for SoundHound AI in 2026. Now that would be more than triple where it's currently trading at the enterprise value of 1.5 billion. This scenario I don't think is very likely. I don't think the company's EV to revenue remains this high. I think it comes back down as the market adjusts to the realities of its business. Now, an EV to revenue of 25 could mean the price increases to 3.733 billion. An EV to revenue of 15 could mean the value rises to 2.2 billion, and an EV to revenue of 12 could mean the stock price, or the enterprise value I should say, rises to 1.8 billion. So in all of these scenarios, there's a stock price increase expected, or an enterprise value increase expected for SoundHound AI stock. So you might be saying at this point, wait a minute, Professor. You just told me that you don't think SoundHound AI stock is a buy, but at the same time, you're telling me that you think the valuation is going to increase by the year 2026. How can you tell me the stock is not a buy and at the same time tell me that the valuation is going to increase in the next few years? That would be an excellent question, which brings me to the next point. When you're making investments, when you're putting out money, you've got to consider the risk. You've got to consider the risk because there's a chance you lose your money. And because there's a chance you lose your money, just because the expected value is positive, just because it's expected to increase over the next couple of years, doesn't automatically make it a buy. Because you can take your money right now and put it in super safe government bonds, and they will give you 5.5%, depending on how many years you're going out investing in. So for example, in this investing horizon of 3 years that we're looking at, government bonds for 3 years are around 4.95%. So your money will increase 5% per year, essentially zero risk, risk-free. So if you're looking at a company like SoundHound AI, the valuation has to increase, has to be expected to increase by at least 5% per year to make it even considerable. And anything near 5% would not be considerable because you're taking so much more risk with SoundHound AI versus a government bond. Doesn't make sense. You'd rather put your money in a safer investment so that your money's better protected. You worked hard for your money. You don't want a chance of losing it without a subsequent return offered for your investment. That's why I can say that I think the valuation is going to increase over the next couple of years. But at the same time, I say that the stock is not a buy because the risk versus that reward doesn't match up. You have better alternatives. You have better options for your money, safer options, safer risk-adjusted returns available for your hard-earned dollars. So all that being said, where do I think the valuation is most likely? I say it's somewhere between the EV to revenue ratio of 12 to 15, between 12 and 15, which would mean the valuation is between these 2 points. And to get more specific, I would say the valuation will likely be somewhere between 1.95 billion and 2.1 billion, between 1.95 billion and 2.1 billion enterprise value in 2026, which would be an increase from where it is today of 1.5 billion in enterprise value. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.